triple digit silver, not because I'm talking my own book. I put a silver company together for a reason, because I'm a bull on silver. It is a very strategic and very much required metal. There's no other metal like it. There's no substitute for silver. So I personally still am a big believer of triple digit silver. The silver market will be priced more fairly as a result of less derivative trading, less paper market trading, because there is a reckoning that I believe will occur.
Sorry, what kind of reckoning is this? I'm pleased to welcome to the show Keith Neumeyer, CEO of First Majestic Silver. We'll be talking about his outlook for silver and his outlook for the silver mining industry. But Keith, it's the first time on my show. Thank you for being here. Pleasure to host you.
Yeah, well, it's first time on your show, but you and I have known each other for a long time, and great to finally be here and then to have a chat with you.
Absolutely. You're well known in the silver space. So let's start with talking about share price performance of First Majestic Silver, and then get into your silver price outlook and outlook for the industry at large. It's outperformed not just the stock market index overall, but also silver itself. So the stock is up 54%, silver is up 28%. Silver is an interesting story. A lot of interest around silver in the last month as it's outperformed gold. So sentiment around mining stocks. I mean, is your stock kind of reflective of the entire industry here? Is money just flowing back into the industry, or are you doing something a little bit differently here?
Well, people are definitely, when I say people, I mean the big institutions, the pension funds, the mutual funds, they are starting to kick the tires again, not like 10 years ago when they were all heavily invested, and then they abandoned the market, in the, 2014 through 2016 period, and they've been gone ever since. And, it's nice to see them coming back into the mining sector. We've seen the majors already make pretty substantial moves. Now the mid-tiers, as we are a mid-tier, and we're starting to be affected. It's nice to see, but it's not even close, to what I'm expecting going forward. If you go back to 2011, our share price was over twice, almost three times the current share price, and we're producing only half the amount. No, actually, pardon me. We were producing about a third of the amount of silver, back then as we're producing today. So, you can make an argument that there's still a lot of room to go, and things have just started.
Let's come back to First Majestic Silver and your corporate strategy and your plans for 2025 and 2026. First, gold versus silver. This is a chart I think a lot of people in the space are familiar with, but I'll run this with you again. The gold-silver ratio is still relatively high compared to historic standards. But right now, June, something happened in June where the two metals diverged. Usually this doesn't happen, at least not very often, but it's happening right now. Silver continues to rip higher while gold is flat, if not down, in the last couple of weeks. Anything particular happened? Yeah.
Well, when silver hit $50 back in April 2011, the ratio was 31-1. And just, in recent times, we've hovered between, the low 90s, the mid 80s, and we even spiked over 100 a couple of times, which is pretty shocking, because the mining sector, only mines 7 ounces for every 1 ounce of gold being mined. So, that in theory, that's where the financial market should price the metal. Obviously it's not happening. But even, if we get down to 30 again, or even, 10 or 15, you come up with the number, you do your math and divide it over gold. And then, that tells you triple digit silver is coming. And I coined that phrase 10 years ago, and I think I'm going to be right.
All right. Triple digit silver. I can already smell the comments because I've had people say this before. You're right. You did coin this term, but people are going to say, "Hey, we've been hearing about this for a decade. We've been hearing about this for 9 years, 8 years. It still hasn't happened. Why are we still talking about it now? Why are you more?"
To that point, David. When I put First Majestic together in 2002, silver was $5.
That's right.
And I called for $50. And, people looked at me like I was crazy. Well, it took 10 years to get there, but silver didn't get to $50. I didn't predict silver was going to go from 50 to 12 over the next 5 years, which it did. But I coined the phrase triple digit silver, not because I'm talking my own book. I put a silver company together for a reason, because I'm a bull on silver. It is a very strategic and very much required metal. There's no other metal like it. There's no substitute for silver. So I personally still am a big believer of triple digit silver.
I mean, to your credit, when I first started working with you back 5 years ago, that was $17.50. Now it's double that, more than double that in the
Yeah.
span of 5 years. So, if we apply the same exponential growth, just in theory, we're looking at triple digit silver in 5 years. But why are you in particular, why are you so confident now? I mean, even given that silver has already run up 100% since 5 years ago, why are you doubling down now? Anything different?
No, not different at all. When I put the company together, solar panels, electric cars, a lot of the gadgets, nuclear power plants, things like that, which all require vast amounts of silver, weren't really on the radar. I was looking at cell phones. It wasn't that much earlier that I bought my first cell phone. I'm seeing everyone all of a sudden getting cell phones and computers, and I said, "Geez, what's going on here?" And I came from a copper company. So my mentality was very much supply demand related. And I think that's just simply what it is. We're in 5 year deficits for silver currently. There's no light at the end of the tunnel. There's no reason why all of a sudden the mining sector is going to start supplying more silver to the market. We need higher prices in order to supply more. The mining sector is not going to make the investments to produce more metal because we've got a lot of low grade ore out there that just requires tons of investment to get out of the ground and get produced to supply industry. And we're not there. That's going to take 5 to 10 years to actually start to increase significantly the amount of silver that the silver industry is currently producing. So you're going to get this huge run up in prices just to incentivize the mining industry to make the investments necessary to meet that supply deficit.
Is there a reason that silver is running up now faster than gold?
It always happens. Gold is the granddaddy. It's a granddaddy commodity. It's gold is currency. With all the, currency issues and all the turmoil going on around the world and the central banks, buying gold and, silver had to follow. It was just a matter of time. Based on the meetings I'm having with, big funds around the world, throughout London, New York, and elsewhere, Singapore, Hong Kong, places I go to and talk to some of these very large investors, they're waking up to this story, the silver story. Previously, you go back 10 years and silver was looked at as the poor man's gold. And that big run, we had from, $250 gold to $1,800 gold and $5 silver to $50 silver. Even then, people just looked at silver as a poor man's gold. There were no deficits of any significant magnitude back then. But today we have serious supply problems in the silver industry, producing all the products that we need to produce. No one talks about the military needs of silver. No one talks about the nuclear renaissance that we're looking at. For every nuclear power plant that's going to get built over the next 10 years, all those plants need silver. So the demand isn't going anywhere. So no, I think the investors are just waking up to that fact.
This is a slide from one of your corporate presentations recently published that I want to draw people's attention to. You were just talking about this industrial demand is leading the way.
Mm-hmm.
Silver demand, industrial silver demand has risen by 33% since 2020. It's going to continue growing because of the reasons you've stated, electrical and electronics demand to increase. Silver demand for EVs as well from EVs rather, in batteries, solar panels, the electrification of the world will continue. And importantly, there's a silver market deficit that's still in place, that's
Mm-hmm.
projected to be in place for the second half of the year. Um,
For the foreseeable future.
Yeah. Well,
There's no
so
there's
why is that? I mean, is the mining industry stepping in to fill this deficit anytime soon?
Well, how can they? There's no incentive to do it. Most silver miners, silver is a byproduct. So there are copper mines, there are gold mines, there are zinc mines. Silver is just noise on their financial. They don't even tell you, report to you how much silver they produce because it's such a small item for as a revenue item for them. It adds a little bit to their profit, but they're not going to increase investment at the mill or the mine just to get a little bit more silver out of the mine because all the revenue is coming out of their core products, which are generally speaking copper and zinc and gold.
Okay, so let's say the government invites you to a meeting with PMs and perhaps other industry leaders, and they say to you, hey, Keith, silver is now a critical mineral. We need this to build our grid. And then
Yeah.
you have some CEOs of car companies saying, hey, yeah, we need this for our batteries. And then you say, well, hey, tough luck. What's the solution here? What's that conversation going to look like?
Well, there'd be two things, and generally speaking, it's permitting.
Mm,
So you would have to reduce the permitting cycle. I'm the chairman of a company called First Mining Gold, and we have a very large gold project in Northern Ontario, which we purchased back in 2015. So 10 years later, we spent $100 million on permitting. And there's a light at the end of the tunnel, thank goodness. But all permits we're expecting will be in place maybe within 1 to 2 years, and then groundbreaking can start. Then you're looking at building a facility, which will take you, 3 to 5 years to build it. So from discovery to production, because discovery was 2010. So, that would be 20 years, which is pretty normal for a mine. And that's all bureaucratic. The governments can reduce that if they wanted to. And a big copper mine, a big silver mine, a zinc mine, whatever the case may be, it doesn't have to be gold, but they need to allow the mining sector to go in because this is large dollars. So boards of directors have to allocate this capital, and investors around the world, these small public companies have to go continually back to market to find new investors. And when you're looking at 20-year timeframes to get from drill bit to first pour, that's a long time. You got to be pretty darn patient. So management teams have to be focused. They have to raise that capital, and they have to rely on governments to support them through that whole 20-year period. But it shouldn't take that long. And if they could reduce that by 50% or even 75%, then all of a sudden the mining sector would wake up and say, hey, like we can actually put money into this asset and bring this asset into production much more quickly, and we'll be willing to spend the 500 million or the $1 billion it would take to bring that mine into production. But right now, there's just no stomach for these boards of directors or these management teams to finance these assets because of the government risk. Because we don't know the regulatory, the permitting risk in a lot of cases. And then the other side of the equation is the smelting industry. There's very few smelters that have capacity in North America. So if you have a mine that you're bringing online and you're producing a copper con or a zinc con or whatever the case may be, with silver contained in it, of course, and gold likely contained in it as well. Where is all this concentrate going? It's not going into North America. It's going
I
into
mean,
Asia. So it's because there's capacity in Asia. So the governments would allow the mining sector to build smelters and increase smelting capacity. We could keep a lot more of this metal on shore versus shipping it off seas where we never see the metal again.
all right, a few follow-up questions. First, what are the major roadblocks to a faster permitting time? Is it environmental concerns, zoning rights, land rights issues? What is it?
Well, zoning it's usually this is usually government-owned land. It's usually crown land in Canada's sake, or federal land in forestry land in the United States situation. So, you need the federal government on side. So that's very political. So, having a mine being built is, political hot potato in some cases. So you need, politicians on side, and sometimes that's a bit of a challenge. Then the actual permits themselves, you have to get through the environmental side of things, and you have to do water quality tests. And I'll give you an example in the First Mining Gold situation. We had to collar 50 caribou 8 years
Yeah.
ago, and then they've been tracked by GPS, so we know exactly where these caribou go. So that when all the roads get built into that operation, that we don't, build roads over top of, past the, caribou, right? Which makes sense. We don't have a problem doing that, but it's not only that. It's fish studies, it's water studies, it's for flora and fauna studies. It's just study after study after study, and
Yeah.
all these studies cost money. You have to hire consultants, you have to hire lawyers, and you have to raise money to do it. And these are multi-year studies that take time. Yeah, it's just quite complex.
Is that one of the reasons why First Majestic Silver has projects outside of North America?
It's definitely part of it. Mexico, despite its challenges over the last few years, I put the company together 22 years ago, and when we permitted our first mine, we bought our first mine in January of 2004, and we were in production by October 2004. Mind you, it did have a mill on site. It had some permits in place already that were legacy permits dating back to the 1980s, but we had no pushback by local government. Uh, uh, it was actually surprisingly simple to get it up and running. You could not do that in most jurisdictions around the world.
Is there a difference in attitude between the governments of Latin America, where you're operating, versus the US and Canada when it comes to mining?
Well, it depends on how you define Latin America. Costa Rica would be a standout where they mining is banned. You're not allowed to
Fair
mine.
enough.
Yeah. So Panama, we've seen the challenges in Panama. No, but Peru, Argentina, Chile, Mexico, Brazil. These are mining friendly jurisdictions. And the nice thing about them is you can get a workforce. Like in Mexico, if we were to break ground on a new mine tomorrow, we could have 500 workers there within a couple of weeks because there's a big skill set. There's a workforce that's used to mining, very familiar with mining. That's quite different than in Canada or the United States, where you really struggle, to get that workforce because it's not that familiar of a business, and it is perceived as a bit of a dirty business as well. So, some people prefer not to work in that business. In Mexico, mining is an extremely high paid job. It's one of the most highest paid industries in the country. So, to get a mining job is actually a pretty good thing. It's a sought after position in many Latin American countries.
Going back to this deficit slide, do you think that there's enough above ground inventory, especially from recycling, that can offset this deficit?
I was in a refinery in Japan just back in April, and this refinery is running at 50% capacity, and they have a team of people that scour the planet looking for waste, computer waste, generally speaking, mostly computer waste, and they can't find enough of it. Um, the recycling is a very energy intense business. You need hydro or you need nuclear. You're not going to be burning fossil fuels to recycle metal. You're just going to blow yourself up. You can't do it. It's just too expensive. So your energy costs are key. And the technology that particular refinery is using is key because it's got to be able to take out a variety of different metals and these complex components that, we built, to take the gold and silver out of a cell phone is not exactly an easy task. It takes a lot of energy, a lot of time and work to get it out of there, and to do it economically is tough. And if you go back to the previous slide, um, um, that one, no, there was actually an earlier one in this presentation. Oh, here it is. Um, yeah, so the gray bar is recycling, and you see there's a recycling number has pretty much been in the 150 million ounce range over this 10-year period. It hasn't really fluctuated very much. And that's despite price volatility, right? So, that tells you that there's not a whole bunch of recycling going on just because it's too expensive. There's no recyclers to any great degree in North America. Most of this computer waste or recycled metal gets produced in Asia, where they're less um, uh, constrained, by energy use and technologies.
Some people might look at this chart and say, well, silver has been in a deficit for quite some time. The price is just starting to catch up. Although, if you look at this chart, Keith, the deficit numbers have been quite correlated with the actual growth of silver in the last 5 years. Like I stated, it's up about 100%. It occurs to me that maybe it takes some time for the price to start to actually reflect the fundamentals? Is that, or maybe the price is more reflective of investment demand, which is a little more volatile?
Oh, for sure. These deficits have been now 5 years in, and actually, if you go back further, which we don't have on the slide, there were deficits previously as well.
Yeah.
But, the market doesn't pick up on this stuff. As I said, most people don't understand silver. I think silver is probably the most misunderstood metal on the planet. It's looked at by some as a currency, which I don't believe. I look at it as a strategic metal, and then I think investors are waking up to that. But it's always been looked at as a poor man's gold. I even heard someone the other day said, "Oh, because gold's $3,300, people are now buying silver because it just makes more sense." Well, that's not the reason to buy silver. To my mind, anyways. I own gold because it's a hedge against currencies. I buy silver as a long-term investment because I think prices are going to be much higher due to the supply-demand fundamentals, and I think it's not correlated to gold at all. I think it's actually will become its own a standard going forward, more like uranium or copper.
What is the silver mining industry now doing with capital investments, drilling, exploration, or even in your case, production profiles now that silver is finally above $30 an ounce?
Well, we don't adjust our production due to price. When I say that, it's not there is we can produce lower grade ore and make money. And that does happen to some degree that the GM, the mine manager will run into an area that maybe 2 years ago at $20 silver, it wasn't economic, but today at $33 silver or $35 silver, it is economic. So he may pull it out. And we do see that, but you don't. It doesn't add, substantially to the daily production. It helps out to some degree, but for the mining sector, as I touched on earlier, to really make substantial investments into the sector, you need, $100 silver for a couple of years in a row, because you go back to the length of time it takes to make a decision, to get the board of directors to raise the capital and get the permits in place to build a new operations. You look at production from the sector, we're flatlined, and you showed the slide. So we peaked in 2016 at 890 million ounces of total production worldwide, and during COVID we got down to 780 million ounces, and today we're at 830 million ounces. So we can't produce more metal. That's it. The mining sector cannot produce more silver at current prices.
Is the other solution just to expand the deposits then? If we can't produce more with current deposits, then we have to find other deposits and start drilling more. Is that the long-term sustainability path?
Well, then you're touching on life of mine. So, I can give you an example on one of our mines, Santa Elena, which we bought in 2015.
Yeah.
That mine was producing 2.5 million ounces of silver equivalent per year at the time, and it had an 8-year mine life. So last year, and this is 10 years ago. So last year, 10 years later, it produced 10 million ounces, so 4 times greater production than it did when we bought it, and it still has an 8-year life of mine. So that tells you that our drilling program at that project has been extremely successful. Not only because we're replacing ounces every year, and that's the job of a good geological team. Is if you're producing 10 million ounces a year, you want them to find 10 million ounces a year just to keep that operation stable. And it's got an 8-year mine life today. 10 years ago, it had an 8-year mine life. And I'm assuming, based on that asset, because it is extremely prolific asset, I would be willing to bet 10 years from now, it'll still have an 8-year mine life.
Do you remember what the industry was doing, the silver mining industry was doing back in 2011 to 2012 when silver hit its then all-time high of $50 an ounce? It didn't stay there for very long. It came back down to about 33 or so before it fell alongside gold. But surely there was a lot of excitement leading up to the $50 an ounce price That's kind of what's happening now. Any similarities you can draw between now and 2010, 2011, Keith?
Well, that was 5 minutes. And I remember the night because it was a Sunday night, and
Yeah.
I was putting orders in the system at the time on my computer, and because I deal with all the silver sales, and so I put in an offer to sell 100,000 ounces at 49. It sold. I put an offer in at 100,000 ounces at 49.50. It sold.
Mm.
I put an offer in at $50, and I went to bed. I wake up the next morning and silver was down $6 in the morning. So, and that was basically it bounced a little, as you can see by the chart, but that was it. And so the mining sector had very little time to react. Um,
Sure.
we didn't increase spending, we didn't increase expansion programs.
Mm.
Production did not go up. Everything was just flat. And actually, that drop that happened in 2012 actually reduced the mining sector because of that move and silver was so dramatically negative. The mining sector had to start laying off employees. It had to start cutting back exploration programs because the mining sector was starting to gear up.
Mm.
Because back then in 2011, everyone was figuring that this bull market was going to continue, and gold was at 1,800 at the time, and copper was at 450, and things were looking pretty good for the sector. But then it ended so dramatically, so quickly. All of the entire mining sector just took a big step back and started cutting costs, cutting investment all throughout the entire industry.
If you and I guess many other executives in the space believe that silver has a lot more room to climb, perhaps even to triple digits, shouldn't producers like yourself be looking into acquisitions now while things are still relatively cheap before deposits maybe triple in their net asset values?
Well, we've got 4 operating mines right now, and this year we'll produce close to 32 million silver equivalent ounces, of which 55% of that is silver, 35% of that's gold. So we're in a pretty darn good position. Our balance sheet is the strongest it's ever been in the company's history. We just took over a Los Gatos silver mine or Gato Silver in January after years of work, and that was adding a great project, a 10 million ounce producer to our portfolio. So we would love to add another 10 million ounce producer, but finding them is the challenge. It's not going to help us a lot to go buy a bunch of juniors, because you have permitting risk. And that goes back to my previous question or comment about a 20-year cycle. So, if we loaded our portfolio up today with a bunch of exploration companies, what are we going to do? Wait 20 years before they're producing? So for us, we have to buy permitted assets. Assets are either in production today or ready to become into production. That's where we are in the scheme of things, and and then that puts us in a bit of a tough space because there's really very few targets out there that meet that criteria.
But has demand or at least appetite for M&A in the silver mining space changed in the last year?
Well, there's a lot you saw. Well, we took out Gatos, and Pan American took out Mag, and Corp took out Silvercrest. So you had 3 huge silver transactions take place in quite a short period of time. So all of a sudden, 3 publicly traded companies are gone. And so if you look at the silver space, there's really only 4 large producers in North America. That's it.
What is different, if anything, with the exploration space, the junior side? Are you seeing more companies develop projects now? Are you seeing more companies pop up? No change at all to the price? How could you evaluate that sector?
There's definitely new companies. I just came from the Rick Roll conference down in Boca
Yeah.
Raton, and there was new companies there that I hadn't seen before, and new companies are pop, but that's normal. In a bull market, you always tend to see new companies formed, and that's good to see. But some of the older companies that I'm more familiar with, they're getting money now. First Majestic does have a portfolio of juniors that we've kind of helped out along the way, and then we're happy to do that to a limited degree. I think we own about percentages, maybe chunky percentages of maybe 6 companies, 6 silver companies, and we continually help them out. And they're now getting money from other sources, and then their stocks are starting to improve. They're starting to develop their assets, but that doesn't mean they're permitted, right? They're in the exploration stage. They got a long road ahead of them, to get ounces out of the ground. I don't mind being an early investor, but it's not going to help us out, in a big way when it comes to adding ounces to our top line.
On that note, here is a slide outlining Q2 and Q2 production and Q1 2025 highlights. So importantly, you've improved your ASEC, you've improved your cash cost. You now
Yeah.
have a record cash position. Before we talk about what you're doing next with this cash, what was your strategy in the last quarter for reducing your cash cost?
Well, synergies more than anything. Los Silver Mine came into our portfolio in January, and it had its own, G. It was a single asset company, so it had a lot of costs associated with that, high exploration costs, high energy costs, just a bunch of stuff. So First Majestic being much larger company, we're able to go in and redo a lot of the legacy contracts and just buy products, buy chemicals or whatever the case may be, at much lower prices because our purchasing power is much greater, reducing exploration costs by 20-30% on a per meter basis, just because we have huge exploration programs. This year we're doing about 250,000 meters of drilling. We had 28 drill rigs active throughout the business. So, these drill companies want to do business with us. So, our contracts are, are much better looking contracts than a much smaller company would ever be able to get, right? So that puts us in a
Yeah.
lot of strength. Yeah. So, anyways, so as a result, go down, cash costs go down, but we're always looking for ways to continually drive costs go down because we are in a very much inflationary environment, and we always have to have our eye on the ball to
Mhm.
continually reduce costs.
By the way, is it a fair statement to make that theoretically speaking, the floor for the silver price should be somewhere around the industry average for the all-in sustaining cost? Meaning that, I mean, I know you can't just turn off a mine, there's costs involved in that. It won't shut off overnight, but there would be, let's say silver drops to $15 an ounce, suppose. There would be less of an incentive for a miner like yourself to produce any silver, right?
Correct, but the couple things would happen first, and this goes to my earlier comment when I was talking about
Yeah.
the silver chart that you had up on the screen. When silver went from $50 to $12, what did we do? We laid off a third of our workforce, so 1,500 people lost their jobs. We cut exploration down by 75%, I think it was. We cut
Hmm.
our development costs down by 50%. So the three largest in costs in any mining company is headcount and exploration and development. So those are the three things that get hit first. And that's what we did, and that's what the mining sector does. And so that all-in sustaining cost of $19 that you showed on the previous slide, that's at already an elevated cost because we were on full guns. Our development cost, which is also on our presentations, is close to $70 million. Our exploration costs are $45 million. So we're pumping on all cylinders and taking advantage of the current metal prices, and that is reflected
Yeah.
in that $19 all-in sustaining cost. So if we all of a sudden start cutting those two investments, that all-in sustaining cost would drop substantially and would then meet or match a new price in your example if silver is at $15.
So do you, as a strategy, corporate strategy, do you have an all-in sustaining cost that trails the price of silver and follows it up or down, or do you sort of maintain a constant uh, spread or difference here,
No, it
range?
does. It definitely trails the price of silver for sure.
Okay.
Like we do adjust our spending as a result of cash flow changes. Right now the business is making substantial amount of cash flow. So we have, record exploration programs. Like why not? Like why not put the money back in the ground to expand our life of mines? If we could expand the life of mine in from 6 years to 10 years, That's not a bad thing. The analysts like it, investors like it. So it's a good use of capital, and it gives our geologists and our operating staff a real look-see into the future so they could do proper mine planning over long-term periods rather than just short-term, 6 months here, 6 months there. We can have 3, 5 year life of mine, plans in place if we have long mine lives, and now's the time to be expanding mine lives, and that's what we're doing.
Is that your primary strategic priority here, expanding mine life? In other words, what are you doing with
Yeah.
your record cash position now?
Yeah, no, well, but the cash is not going down because we're just using free cash flow to do it.
Okay.
We're not dipping into our treasury at all. The treasury continues to grow, and at these metal prices, I'm assuming it will continue to grow as well. So I'm expecting to end December 31st, 2025 on a pretty positive note.
Okay. Finally, let's talk about Mexico itself. In this slide, it's highlighting Mexico as one of the world's premier silver jurisdictions. Can you maybe help us back that up here? Why is this such a highly valued area to mine in?
Geology, Mother Nature,
Mm.
government regulations, you know, uh, staffing, large workforce, availability of large workforces, all those things combined. Um, on the geology side of things, Mexico is the largest silver producer in the world. Just the way Mother Nature created the world, just so happened Mexico, has that silver endowment, and they've been number one for years, and that's why I put a silver company together based on assets in Mexico. It was pretty logical to me. Why would I be a silver company producing silver in Canada when Canada barely shows up on the map when it comes to silver production? So, and then all the other things I've already mentioned, why Mexico is such a great place to be for silver miner.
Any new projects and developments that's coming up for First Majestic Silver that investors should be paying attention to and watching out for?
Well, I think I obviously can't talk about major catalysts like M&A and things like that, and there's always that possibility that could happen out of nowhere. But there's always work being done on that front, and we have a whole team of people just scouring the planet looking for interesting looking assets. But I think really cash flows and the silver price has a huge impact on our share price.
Yeah.
So as long as silver prices remain buoyant, that'll be good for our shareholders. But as from a corporation standpoint, we just have to keep cash flows coming. Keep increasing the treasury. If treasury is growing, that means we're doing something right, and that's the biggest measurement of success. I think is watching the cash flow, watching the profitabilities, and so on.
I want to end on this question now. You mentioned the gold silver ratio, so let's end on the gold silver ratio. I know you like talking about this subject. I don't know why there's a dinosaur there. Anyway, let's zoom out so the dinosaur disappears. You started around the industry maybe before this dinosaur appeared, right in the 90s. I want to, yeah, I want to just know why this gold silver ratio has become more and more expensive over the last 30 years throughout your career, and whether or not this is a long-term trend that you see extending into the next 30 years. And if not, why we're going to get a reversal back to historical mean levels.
It's a very complicated question, and I believe it's to do with the industrialization of silver. When you go back to the 70s when the silver contract was first created, it was done really to assist the mining sector to hedge their production, and that was the rationale behind it. Over time, as silver became not coinage and just in film, as those as silver became an industrial commodity, as computers evolved and
Mhm.
technology started to take over, that brought the banks into trading silver because all of a sudden they started getting approached by the big consumers, the Sonys and the IBMs of the world. Hey, we need to produce these televisions and these computers, and we need metal. So the banks started stepping in and started to act on behalf of industry, and so they would hedge on behalf of industry. And so if you were Sony who needed, their 50 million, well, not 50 million, but call it 25 million ounces of silver delivered to, Japan or whatever port around the world to produce whatever product they wanted to produce, they would set up a contract and they would make sure that silver got to your port so you could make your product. And as silver became more and more critical for refrigerators, microwave ovens, freezers, all kinds of electrical components that we take for granted that no one even knows contain silver. The industry just kept gobbling silver up, and the banks got more and more involved. And today, silver trades approximately 2 billion ounces a day on the paper markets, and the mining sector produces 830 million ounces of silver per year. So that's the kind of leverage that the banks trade in the paper market against the physical market. And that does have a dampening effect on price. And hence that has an effect on the ratio.
So the silver industry has been, I would say, indirectly or inactively involved in the longer term trend of the silver price not moving where it should be. Is that a fair assessment to make?
Absolutely, they are. It's not in their best interest to see the silver prices go up. But now with these deficits, and you ask me what's going to change that, with the deficits, I'm a firm believer in markets. I started in the banking sector back in the 80s, and I think markets do go through these periods of we'll call it incorrectness or whatever you want to call it, but they do come back to reality and they do correct themselves. And I think the physical side of things are causing issues. And some of the things I'm hearing, what's going on in the physical markets, we see the transfers, we see inventories dropping around the world. ETFs, are also now accumulating more physical. So there's a huge draw on above ground supplies, and that's, I think, going to ultimately affect the paper market. I don't see how it cannot affect the paper market. So I think people are also waking up to that fact, and people are now wanting to take physical delivery, not just of silver, but of course we're seeing it in the gold market as well. So yeah, I think it's all good, and unwinding
Mhm.
old markets the way they used to run into getting into a new, more physically driven market, it takes time. But I think ultimately we're going to get into a pricing fixing situation, a pricing situation whereby the metals market, the silver market, will be priced more fairly as a result of less derivative trading, less paper market trading, because there is a reckoning that I believe will occur.
Sorry, what kind of reckoning is this?
I think the markets are just going to wake up to the short position.
Yeah.
Working at the banks, you're a trader. These are young MBAs out of school. They don't know what they're trading. They're looking at a chart like that, but they don't know what's behind it. They don't know silver. They don't know what the supply of demand fundamentals are. They don't know that their bank has a contract to deliver 50 million ounces to BMW, next year, or so BMW can produce their cars. All of a sudden, BMW phones up the bank and says, "Hey, you didn't, send me my silver this month." Compliance walks down to that trader, in the trading department and says, "Hey, what's going on? We need this metal. Well, sorry, we can't find it. We're short and there's no physical out there." And then the bank goes, "What the hell? Cover it now." And that's what's going to happen.
Okay. Well, let's leave it on that. And by the way, I've just noticed that this is just a pattern. It doesn't really mean anything. It doesn't have to mean anything. But every time the gold silver ratio peaks, it falls back to a trough of roughly half of what it was before. It's happened pretty much every time.
Yeah.
So let's assume that this time is no different. We're looking at the gold silver ratio to compress to about 50 before it stabilizes, but we'll see. Um,
Yeah. And David, if you went back further, you're only going back till 1998.
yeah,
If you go back 100 years, this chart would look substantially different, right? Because the paper market was created in, I think, 1974 from memory. So, from 74 to date would be one comparison.
yeah.
But nevertheless, it's very much paper driven. The mining sector, we sell our metal to the banks, and that's the way it works. And the banks, you know, use that metal or sell that metal to their customers, and industry, that's the way the industry works. and we're part of it.
Right. Well, yeah, and of course, the 100 years ago, the price of gold was fixed. But yeah, you're
Right.
absolutely right.
Yeah. So direct comparisons may not be that accurate, but yeah, yeah. Anyways, hopefully I help answered all your questions.
That was a very educational interview. Let's have you back on again soon and talk about the silver market when it moves. Well, a lot of volatility this summer, so let's see what happens in the second half of the year. Where can we learn more from you in the meantime? Follow your work.
Well, I am on Twitter at Keith_Neumeyer. I don't do a lot there, but I do the odd thing. First Majestic website, feel free to go there, firstmajestic.com. We also have a mint, which we didn't talk about. We have our own mint, the only mining company in the world that has its own mint. And one of the reasons why we have our own mint is to hopefully to try to break that paper relationship with the physical, because we're trying to get as much physical metal to the marketplace as possible, taking our medical away from the banks and putting it into the hands of actual real people. And it's a long-term strategy of ours. And
Are you minting the coins and bars from the silver that you mined?
exactly, yeah, it comes up from Mexico.
Well, that makes a lot of sense, actually. I
Yeah.
wonder why more miners aren't doing that. Um, this I came back from a Bitcoin crypto interview conference not too long ago. And you know what the most Bitcoin miners are doing is they're mining the Bitcoin and then they're holding it. So they're basically kind of like a hedge fund in that sense. But they're not trading the Bitcoin; they're just holding it. I know this is a completely different industry, but I wonder why miners like yourself don't just hold the silver. Why release it into the market? I mean, I guess there's an industrial
Well,
demand for it that you have to satisfy, but just from a company standpoint, I mean, surely you have to hold some. It'll be prudent to hold something that you think is going to go up in value, right?
we do hold quite a lot. I don't know the number over Q2 because the Q2's just ended. We had about close to 600,000 ounces over Q1. Um, there's a lot of value. That's $25 million worth of silver that I look at as money. We could sell it tomorrow if we wanted to. But we do have a group of investors out there, and they're completely on different sides
Mhm.
of the spectrum. They got the retail investor that says, "Hey, don't sell any metal, just hoard it all." Well, we do have employees, 6,000 employees in the business that expect to get paychecks, and we have big exploration programs, big development programs. Mining is a pretty expensive business, so we got to sell something to pay for the business. And then you've got the institutional side of the investor landscape where they want to see top line growth and bottom line growth. They want to see as much profits as possible on the bottom line. So in order to achieve that, we have to sell everything, sell our inventories down to zero every quarter just to satisfy that group of investors. So running a mining company is always challenging, or you got to always have to kind of just walk on that fence. And we try to do that.
Perfect. Well, that's it here for now. Keith, thank you very much. Don't forget to follow First Majestic and their mint company. The link's down below, and also Keith on social media. Appreciate it. Have a great day.
Great. Thanks, David.
Thank you for watching. Don't forget to like and subscribe.